Okay. Got it. Okay. And I think we're pretty much caught up on posting the recording, so I'll continue to try to, chase through that and get that move along. What we're going to do today is finish up. Okay, I lost my camera. Let me try one thing and then I'm going to give up on that because that can tend to be take on its own life. It's one thing, and if that doesn't work, I'm not going to have the camera today. Okay, seems like it's back, so that seemed to work. Okay, guys, don't chat. Just well, okay, I see why a person chatted this. By all means, if someone needs to use the restroom, you don't have to ask me. We're all grown here. So please do so. Generally, if you have a question, I prefer you not chat that in. I can understand why someone wanted to chat that in, but generally, I'd prefer you to just go ahead and not chat things in. Oh, this thing's giving me a hard time today. Okay, good. So let's go ahead then with all that sort of clumsy fumbled start, and let's take a look at really. Oh, I swear I have everything prepared and open before class, and it has a way of figuring out a way to not open for me. What is going on? Let me try to close this. Get that out of the way. Get that out of the way. Okay. Hang on, guys. It's going to be one of those. It's ponderous sometimes. It really does. Okay, 1 second, guys. It confounds me why a machine that bills itself as a tablet loses its mind when I go into tablet mode. But such is technology. Okay, so my recollection is, correct me if I'm wrong, that we multiple step, and I'm not going to mess with the camera. It wants to turn itself off. Fine, I'm not going to fight with it. But my recollection is that we were coming up to the discussion of how to prepare the income statement in a multiple step format. Is this the slide we were on, to your recollection? Can you hear me, guys?
Yes.
Have a confirmation on that? Okay, good. Okay, so this is where we were. And when we talk about the multiple step income statement, and this becomes more relevant when we are dealing with a retail entity. Sometimes the book will call it a merchandising entity. And we're going to report something called gross profit. Okay. And as we said last time, and we sort of practiced with a little bit last time, we have our net sales. Now, what happens? We take our sales and then we would subtract any sales returns, any sales discounts. That would generate something called net sales. Now, often you'll pick up the financial report of a company and they'll just start with net sales. But we should understand that that term net sales is our sales minus anything that was returned, minus any cash discounts that we gave on that. Then we report our cost of goods sold. Our cost of goods sold is what it cost us to acquire the inventory that we ultimately ended up selling to our customers. The difference between our net income and our cost of goods sold is that we will have something called gross profit. Now, gross profit is a very important number. And the reason it's important is we need our gross profit to help cover our operating expenses, which becomes the next section of the multiple step income statement. Now, the way users of the income statement look at this, they say, well, we want to see that this company is going to have something left over after it has paid for whatever it is that it's selling to cover its day-to-day operating expenses. And so most companies would like to see some fat sitting there in that gross profit. Nobody tells gross profit to go on a diet. They sit there and they say, okay, that's pretty good. You've got some chunk left over. Now, something that we'll see when we go through our practice midterm here for chapter 5 a little bit later, we're going to see a calculation that is often made by investors where they will sit there and they'll say, okay, look, I'm going to take that gross profit number, that 144,000 in this example, and I'm going to divide it by the net sales. Now, when I take 144,000 and I divide it by 460,000, what number do I get here? That's a question. I'm waiting for a response.
Maybe gross profit percentage.
I'm waiting for a number.
0.31304347826.
Okay, so we've got what? We've got 0.31 or 31%. Okay, good, thank you. That number, as was indicated, is called gross profit. I've also seen it called gross margin percentage. Okay, and so this is saying that, look, for every dollar of sales, you have 31 cents left over to cover your operating expenses. That's okay. I would think you might want that number to be more than 31%. That's not bad, okay, but analysts will often make that calculation, okay? Now, the next thing that we do is after we have that gross profit number, we go ahead and we start to subtract operating expenses. Operating expenses are day-to-day expenses that the company really has to incur in order to run their business, okay? So what happens? You start to take a look at some of the things that are here, and you sort of see how salaries, right? You got to pay your employees or a day-to-day expense. Utilities, we can't operate in the dark. We're probably going to have some electricity. Advertising is something that a company will probably incur on a day-to-day basis. As our assets depreciate, which you'll get into more in the next class, 1B, we're going to have certain depreciation expenses, okay? Freight out, we talked about. Freight out is what? When the seller pays the shipping charges, well, that's probably a day-to-day. We want to match it against our sales anyway. And so that's going to be a day-to-day type expense that would be reported. Now, remember, if the purchaser pays the freight, then we consider that to be part of the cost of the inventory, and so on. So we take all of those operating day-to-day expenses, we go ahead and we subtract those from our gross profit number that we had calculated up there. That difference is called income from operations. Now, this is also an important number because analysts will look at this and say, well, that's the ongoing aspect of this company's business. This is the day-to-day. This is the bread and butter. This is how they are going to generate growth in this company, right? You have to take your net sales, you subtract your cost of goods sold, got to pay that. If you don't have something to sell, how can you sell it? So you got to buy the thing that you're going to sell, the inventory that you're going to sell, and that difference gives you your gross profit. You've got these day-to-day operating expenses, such as salaries, and then you're going to have this income from operations, and they will literally track that over time. They'll do something called a longitudinal analysis, in which they'll sit there and say, well, this is what it was in 2023, this is what it was in 2024, and so on. And they want to see sort of a nice steady growth in that income from operations number. Then we start getting into non-operating items. Non-operating items are things that will come and go. Sometimes a company will have these, and these things will affect our bottom line, our net income, okay? But they're not day-to-day. Now, in this class, gains and losses on the disposal of our equipment, our plant facilities and whatnot will always be non-operating, okay? Now, let's think about that for a second. Let's say, you know, when I was a kid, I always wanted to be a cashier at the grocery store. Because when I was a kid, they had to literally look at the price, and then without looking at the numbers they were pressing on the cash register, they had to key in the right numbers, hit a plus button, and add that in. And they were like almost like magicians, the way they would go through and put all those numbers in. Well, what happens? It's not nearly as fascinating to a kid probably anymore, because all that happens is they just sit there and swipe, bleep, 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 and the amounts get put in. So what happens? When the scanner was invented, a company like, say, Nordstrom, right, our example that we've been using for a retail entity, probably would have gone and sold all those old-fashioned, you know, keying in cash registers and bought the ones where you can go ahead and scan. So they would have sold all of their cash registers. Now, does Nordstrom sell cash registers on a day-to-day basis? Have you ever been to Nordstrom, you buy a pair of shoes, and they say, oh, that's a nice pair of shoes, sir. Would you like a cash register with that?
No.
No, they don't sell those on a day-to-day basis, yet they may, from time to time, when new technology comes along, sell their cash registers, sell their equipment and whatnot. And if they sell it for more than its book value, what it's being carried on the books, that's a gain. But investors want to see them break that out separately, because they know they're not going to sell their cash registers every day, right? So they put that in a separate section, which is this non-operating section, so that it is separated from income from the day-to-day continuing operations. Obviously, casualty, loss from vandalism, okay, is not something that companies will incur every day. It's certainly not their day-to-day operation, so they tease that out separately. In this class, interest will always be treated as non-operating. Interest will always be treated as non-operating. The notion here being a company really should not be borrowing money to operate on a day-to-day basis. Yes, there are times where you may need to take a loan to operate, but that shouldn't happen all the time. And so we'll put interest expense as non-operating. Interest revenue, what happens? A company has some money in a bank account. They're earning some interest on that, but that's not their day-to-day operation. So we put that separately in the non-operating section. Difference between our operating income and our non-operating items yield us, which we're very familiar with here now, our net income. Question.
Yeah, I have a question. Can you go back before so is there a way to like reword the gain on disposal of plant assets to kind of make a little more sense? Because that's the only one on this income statement that I'm still a little unsure of.
Okay. Yeah. Well, let me just give you an example. Let's say, okay, I have equipment. I'm just going to sort of write it in the middle. I don't mean for this to be something we can report on the income statement. I'm just going to put it here for lack of space. Okay, let's say I have equipment. And the equipment, let's do it instead of equipment, let's do it in land. It's probably a purer way to do this. Let's say I have land and I paid $100,000 for that land. Okay. Now, if I paid $100,000 for the land, say 5 years ago, how much am I reporting that land on my balance sheet at?
100,000.
100,000, good. Under the historical cost principle, I still carried it 100,000. Now, let's say that I'm able to sell that land, I don't know, whatever, I said 3 years later, whatever, but I sell it for 150,000. So someone hands me $150,000 cash, what should I debit? Guys,
Cash.
that's the stage where that is any kind of mystery at all. If someone hands me $150,000 cash, what should I debit?
Cash.
Cash.
Cash, 150,000. If you don't know the answer to that, you're in trouble for our next exam, okay? Because we're well beyond that now. Good. I debit cash 150,000. I'm giving up title to the land. So what should I credit?
Land.
I'm going to credit the land for 150,000. I mean, for 100,000 because the land was being carried on the books at 100,000. I want to take it off the books because I've sold that thing, right? With me so far, Molly?
Yeah, I'm writing it down. Thank you.
Well, I'm glad that you're writing it down, but are you with me?
Yes.
Okay. Okay, good. Then I need a debit or a credit to finish out this journal entry.
You need a debit.
Try again.
Credit.
Okay, debits equal credits. I've got a debit of 150,000, so I need a credit of 50,000, don't I?
Yes.
Okay, Mala?
Yes.
Okay, okay, good. So that credit is going to be on gain on disposal of land for 50,000. And then when I prepare my income statement, I would report gain on disposal of land. And you know, I probably should have tried to make it 600, so I would tie to what they have here, but that would be reported as 50,000 here. Because I sold it for more than its carrying value.
Yes.
Okay. Now it could happen, you know, I buy the land for 100,000, and for some strange reason, that's generally not the case with land these days. But let's say I'm not able to sell it for 100,000. I don't know, something's going on with the economy. I paid a lot for the land, and now I can only sell it for 80,000. So walk me through, Mala. If I sell it for 80,000, what journal entry should I make? Bought it for 100. Now I want to sell it for 80. I'm only able to sell it for 80.
Okay, let me relook. So you're only able to sell it. So
I'm going to get
it's
80,000.
can you still debit it for 80,000 or no?
I'm going to get $80,000 cash. Give me the journal entry.
Debit cash for 80,000.
Okay, good.
and then you credit it for still 100,000, right? Because you still got it for that.
Beautiful. I have to take that off the book, so I'm going to credit that for 100. Good. Do I need a debit or a credit to make this journal entry balance?
So the last one, you need a credit to make it balanced.
Okay, you understand that debits equal credits, right?
Yes, what was the last one? The
No, I
land.
don't care. Worry about the last example. Just look at this right here. Do I need a debit or a credit to make this journal entry balance? Huh?
So if it's not credit, then it's got to be debit.
Stop. Just look at this entry. Does this
I know, but the writing, if I'm being honest, is very sloppy. So it's hard to look at the entry sometimes and follow along. That's why I write it down so I can look at my notes because it makes more sense to me.
That's fine. You know, I've been writing sloppy since I was in the 4th grade.
I know. So on my notes, so what I'm confused on is the last way to close the entry, we credited a gain of disposal of land for 50,000. So if you're saying debit equals credits, what I'm following along is if I debited the cash, credited the land, even though you credited the land for 100,000 last time, how do you get this like debit equals credits? Because I'm having the debit for the cash, credit for the land, and then last time was credit for 50,000. So it wouldn't be a bad guess for me to have said credit it.
Yeah. Shouldn't guess. I mean, I'm trying to get you to a point where you're understanding that if you debited, regardless of how sloppy or what I'm writing, what I'm trying to help you to understand is that if you sit there and you say that you debited something for an amount, 80,000, and you credited something else for 100,000, then you need another 20,000 a debit to make that journal entry balance, right?
Yes.
So do you want me to debit or credit this journal entry? Regardless of what sloppy is written on the screen.
Well, so I'm confused because the first time I said credit, you said no. And then I said debit and you said no.
Well, I said no because you said credit. And then I started getting concerned because I want you to understand what we're doing here.
So, but the problem is, which was it credit? And if it was credit, why was I told no? Because then you just completely threw me off.
Because it's not a credit, it's a debit.
Okay, so I said debit and then you said no because you got mad that I was
Well, no,
guessing it was debit.
Because I
said,
got
oh,
mad.
it's
I
not
didn't get
credit, then it
mad.
has
I'm
to be debit.
concerned because you were debiting.
Don't say no, at least be like, yes, but, because now I'm like, okay, which one is it? Because then when you ask me the third time, if you've given me 2 no's, what am I supposed to do?
Okay. Because I said no because I didn't want you to guess.
Okay, well, could you say that next time? That way I'm not like, okay, what
I'll
the
work
hell
on
are you
that,
doing?
you know, 30 years from now when I'm dead, I'll try to be a better teacher. Okay. I've been doing it for 30 years. You know,
It
what
doesn't make sense to be a better teacher when
I'll
you're
work
dead.
on it. I'll work on it. Okay.
And I'll work on making sure I'm confident in my answers. So I say it's debit and it's gonna be 20,000 then, right?
You know, you can hate me all you want. I'm trying to help you. Okay.
It's
So
not
go
hating, I'm
ahead.
actually laughing because I just like finally I feel like, you know, there's actual communication of how like lost I can be, and like I'm pretty sure some other people feel the same.
I don't
So
care about anybody else right now. I care about you.
I know that's why I'm not mad. I'm like laughing because I'm like, at least I get it now. I do get
Okay.
it now.
You get it? Okay, good.
Yeah. So thank you.
Mission
I do get it.
accomplished. You should hear my house as people, you know, go through and understand things. It's a riot. Okay. All right. So we're good now
Yes, thank
on
you.
how, well, let me finish the thought anyway. So, which is in that particular case, okay, where we went ahead and let me just write that loss part of the journal entry, which is where I was going with that. You debit cash for 80. You credit the land, right, for 100. Okay, and I know that's sloppy. That's why I always say, listen more to what I'm saying than what I'm writing. We need $20,000 of debit, okay? And that debit is going to be to loss. Okay, that says loss, L-O-S-S. That's going to be a debit to loss. And then we would go ahead and we would report instead of a gain, we would report a loss on disposal. And that loss would show up as $20,000 in this example. And it, of course, would be a subtract from our operating income because it's a loss now, right?
Yes.
Okay, so that's all where I was trying to go with that was ultimately you'd report that. But and then the broader takeaway is, well, you know, we're teasing those things out from our operating because the company doesn't sell their land every day. Okay. All right. Any question on that?
Yeah, Professor, I have a question. What if the asset has a if we are using that asset and we are claiming as a depreciation and we sell the asset, what would
I'm
be the
sorry.
general entries?
Can you start over again on that? You're going too fast for me. What's
Uh,
happening?
I'm so sorry. If
Yeah.
any asset, suppose it's a truck and we are claiming the depreciation and we sell it, so what would be the general entry with the depreciation?
Okay, well, we're beyond the scope of what's covered in this class because we don't cover depreciation here. But since you asked the question, I will answer it. Okay, but I just want everyone to understand that's beyond the scope of counting 1A here at De Anza. But let me go ahead and answer your question. Okay, so if we had, say, equipment. And the equipment was 100,000. And it had accumulated depreciation, which we are not studying in this class, of say 70,000, just making a number up. Then this equipment would have a net book value of 30,000. Okay, now, if we sell the equipment, and I'm going to assume we're going to sell this equipment for 20,000 cash. Okay, so if I sell it for 20,000 cash, what do you want me to debit?
Cash.
Okay, cash. 20,000. I'm selling the equipment, so I have to do what? I have to get rid of the equipment on the books.
Yes. Yes.
So I credit the equipment. EQ is equipment here for 100,000. Since I'm getting rid of the equipment, I also have to get rid of this related accumulated depreciation account, which again, we are beyond the scope of what we have talked about in this class, but I would have to debit in what we will talk about in this class. I would have to debit accumulated depreciation for 70,000. Cash is debited for 20. I have to debit the accumulated depreciation for 70. Okay. And so do I need a debit or a credit to make this journal entry balance?
Debit loss.
I have
10,000.
to debit 10,000, right? And that debit of 10,000 is to loss because I sold the equipment for less than its book value. It had a book value of 30 and I sold it for 20. That's a $10,000 loss. And that loss would be reported down in the non-operating section of the income statement. If I sold it for, say, 45,000, then I need a $15,000 credit to make the journal entry balance, and that would go to gain. And again, that would be reported down in the non-operating section of the income statement. Question?
Thank you.
Okay, good. Now this right here is beyond the scope of what we're, so I don't want folks to think that, I'm going to ask you a question on this particular discussion. No. Okay, now, again, takeaway here, okay, because I don't want to lose sight of where we're going with this, is that we have the multiple step income statement. We have what? We have our net sales that we're going to report, and our net sales are sales minus discounts minus returns, gives us net sales. We have our net sales, then we subtract our operating expenses. Those are our day-to-day. Well, I'm jumping, sorry guys. Then we subtract our cost of goods sold. That difference between our net sales and our cost of goods sold gives us gross profit. Then we take our operating expenses, the difference between our gross profit and our operating expenses gives us our income from operations. That's our day-to-day operations. But then there could be things that are not part of our day-to-day operations. We call those non-operating. Those are our gains and losses on the sale of equipment and interest revenue, interest expense, okay? And gain on the disposal of plant assets, equipment and whatnot. If we sell it for more than its book value, that's a gain. Less than its book value, that's a loss. The difference is net income. Now that is the multiple step income statement. You can see that investors like that format because it allows them to sort of look at the company as, you know, it's day-to-day, things that are controllable, not as controllable, that sort of thing, okay? Now, we could also have something called, and I have to go back, I should probably flip the order of these, but we also have something called the single step. Now, notice that our net income was 31.6. When we go from the multiple step to the single step, okay, notice the net income is still the same. All that changes is the way we present the information on the income statement. So what we do is we take all the things that would increase net income and put them in one big section. And then all the things that would potentially decrease net income, we put them in one big section, okay? This is called the single step. I don't know, maybe they should call it the two-step. Then again, the country western people may not like that. So for whatever reason, they call it the single step, but it's everything that adds to net income goes in one big section. Everything that subtracts from net income goes in one big section. Difference is net income. Now, you generally don't see this as a standalone presentation of an income statement. Often where you'll see this is if a company is writing up something called a management discussion and analysis, and they just want to quickly talk to you about net income, they might provide it in this format, but then you'd be able to turn to the actual financial statement and see the multiple step. You will always, when you pick up a company set of financial statements, see that multiple step, but I just want you to be aware that there's also something called the single step. Okay, so notice you don't have this nice little stopping point of gross profit, okay, in the single step. Okay, there's no calculation of gross profit. Meanwhile, we're saying, hey, that's a pretty important number, right? So every company will use the multiple step, but then you may see a single step as part of another disclosure that they're providing to investors. Okay, question. All right, good. Come over and let's take a look at, oh, that's the end of the slideshow. Any question on any of that? Okay, good. So now we are ready to end, not the meeting, John. It's the end of the meeting. We are ready to get out of this slideshow. Discard all that. And we are ready to look at the practice midterm for chapter 5. Okay, and don't worry if it says chapter 4, guys. I know that that's can be a little distracting. It's chapter 5, or it's not even chapter 5. What is it, chapter 6? But I've listed it under chapter 6. Let's look back at Canvas just to make sure we're comfortable where this is. It's under chapter 6 right here. This is the file I'm opening right now. Okay. Okay, good. So let's go ahead and let's take a look at this. Okay. And the first question they say is, what is the net sales? Okay, so who wants to help me out with that? You can see what the right answer is, but how would I calculate that? Walk me through it. Do we know how to calculate net sales?
So sales revenues are 15,000 minus sales revenue and allowance 7,000.
Okay, I have to start with my sales revenue. How much is that?
15,000.
Maybe you're having trouble seeing that.
560,000.
560, sorry.
Okay, so the sales, good, no problems. So the sales revenue are synonymous, is 560,000. Okay, good. And then you want to do what?
Returns and allowance minus returns and allowance.
Okay, so I'm just going to say returns. You say are 15,000?
Yes.
Okay. Okay, good. What else?
Minus discount.
Okay, good. You want to subtract the discounts. How much?
7,000.
7.
7,000. Okay, good. Okay. Difference is, what do we call the difference? Word.
Net sell.
Difference is net sales. And that gives me what?
542,000.
I'm sorry?
538,000.
Guys, calculators, don't do anything in your head. Nothing. Net sales are how much? 538.
Yes.
Okay. Good. Question? Okay, good. We got the net sales. Next question says, using the same information, what should be the gross margin? So what should I do to get gross margin?
You're going to subtract the cost of goods.
Excellent. I'm going to go ahead and guys, I often abbreviate cost of goods sold, COGS in here, cost of goods sold. Okay. And so the cost of goods sold was how much?
323,000.
323. I go ahead and I subtract that. And we're saying that's our gross profit. Gross, sometimes we'll see it called gross margin. Those terms are synonymous. Is how much?
215,000.
Good. Okay, good. So we got that 215,000. Okay, nice. Now we have to come up with our operating expenses. So we look back at this presentation up here, and we're going to say, okay, maybe I'm better with pen here. We're going to say, okay, which of these are operating versus non-operating? Let's use an O for operating and an N for non-operating. So is freight out an operating expense?
Yes.
Yeah. Okay. Hey, that's a day-to-day. Good, Molly. That's a day-to-day. What are you going to do? You got to pay the shipping charges if you're paying it. So that's going to be an operating. How about advertising expense?
Yes.
Good. Got to pick that one up. How about interest?
Interest is going to be non-operating.
Beautiful. That's what I like to hear. How about salaries, wages, and expenses?
Operating.
Good. How about utilities?
Operating.
Nice. How about depreciation?
Operating.
Good. How about interest?
Non-operating.
Non-operating, beautiful. So we take out our calculator and we add what? 2,000 plus what? 15 plus, this is a little hard to see which one lines up with which, plus salaries. Am I lining these up correctly?
Yes.
Plus utilities. And depreciation. Did I mark the right ones? So what do you add up? What does that all add up to?
117,000.
Good. That all adds up to 117,000. Now, I'm not going to write the details here, guys, because we'd go nuts here if I sat there and tried to write all those. But we would have operating expenses totaling 117, following what Mala did for us to call all those out as to whether they were operating or non-operating. Question?
No.
Okay, good. So what do we call, I drew the line there. What do we call this number that's going to appear below this line here?
Income from operations.
Good. Okay, sometimes, very good. Sometimes you'll see it called operating income. You'll see that too. Okay, so 215 minus 117 is
98,000.
good. The answer to the next question. There's my operating income, 98,000. Okay, good. Then this question, and guys, this is why I think it's okay to ask you, oh, that's it? Okay, legit, stop there. This is why I think it's okay to ask you multiple choice questions, because I very well, and you will see on your exam, I'll give you one set of facts, and then I'll continue to ask you a series of questions off of that one set of facts, which to me puts that equivalent to if I gave you a full hard problem that you had to work through a set of facts to prepare, say. And what I've done here is what? Prepared a multiple step income statement so far. Okay, so even though I don't have a question set up with this, can we keep going now and tease out our non-operating items?
Yes.
Okay, so our non-operating items are going to be, and we look back up and we have what? Interest revenue, and we have interest expense, right? Because we already labeled those as non-operating. Okay, so interest revenue, I might call out my interest revenue. How much was that? Somebody help me out. Is 7,000?
27,000.
27,000. Thank you. And my interest expense was how much?
18,000.
18,000. Good. So I would add in my interest expense, take out my interest revenue. I could just write those all out. Why am I writing up there? Put in my interest revenue, take out my interest expense. And what do we call this number? Now we can do our net income. So 27,000 added to 98 minus 18 gives me net income of, number, please.
107,000.
107,000. Okay. Okay, good. And that would be my net income. Okay. Now I didn't ask that in this practice midterm, but I could ask you on your midterm. Okay, good. Excellent. Good work. Question. Okay, good. Let's look at this number 5 now. We've got this company purchase switches at an invoice price of 4,000 and terms of 210 net 30. What does that mean? 210 net 30. How do we read that? What's the 2 stand for? Okay, we said last time that when you see that, you need to read that to say that that's a 2% discount if I pay in how many days?
10 days,
10 days. Otherwise, I have to pay the whole amount in how many days?
30.
30. Good. That's read 210 net 30. Okay, good. Now they get those and then they return half the switches immediately, and then they go ahead and they pay the remaining amount of the invoice within the discount period. Now look, guys, I give you a generous amount of time to work your exam. I give you 3 hours to work 30 multiple choice questions. The fastest way to get a question like this done is the slow way. If you start trying to go through and do it faster, you're going to mess up, and then you're going to not get the answer, and you're going to be frustrated, and what's going on, and I thought I understood. To avoid all that, you slowly go through this question and make the journal entries associated with the various aspects of this transaction that are described so that you can get to the right answer slowly. Okay, so when I buy these switches originally, when I first buy them, how would I record the purchase of these items? This $4,000.
Debit inventory,
4,000.
credit cash.
Debit what?
4,000.
Well, I know there's going to be a debit 4,000. Good. To what account?
Cash.
Inventory,
There's no debit to cash when you buy something.
Inventory,
I'm going to debit inventory for 4,000. I'm going to go ahead and tee that up. I need a credit, don't I?
credit cash,
Well, if they're giving me credit terms, did I buy these on for cash?
oh, no,
Huh?
no. You did,
Okay, so I can't credit cash. What do you want me to do?
accounts payable,
I have to credit accounts payable, which I am abbreviating AP for 4,000 because they gave me the credit terms. They're saying that I have some time to pay on that. I'm not paying immediately. So I have to credit the accounts payable, right?
Mhm.
Okay, good. Now I return half of the switches. If I return them, are they still going to be in my inventory? If I return these items, will they still be in my inventory?
No,
No, I send them back. So what do you want me to credit?
credit inventory for 2,000,
Good. I'm going to credit inventory. And we're getting the 2,000 because they said there was half of them. So now the inventory balance is going to show what? 2,000. And if you send something back to somebody, do you still owe them the money? If you send inventory back to somebody, do you still owe them the full 4,000?
no,
no,
Would you pay this guy $4,000 if he sent you something labeled inaccurately and you had to send it back? Would you still say, well, here's the 4,000 because you're a nice guy? Or would you say,
No.
I'm paying you the full 4,000? I only want to pay you what?
2,000,
The ones I kept, the 2,000. So you would debit the accounts payable 2,000. And when I debit the accounts payable 2,000, now the balance is 2,000. So far, I only owe this guy $2,000, right?
yes,
But then it says that I paid the remaining 2,000 amount of the invoice within the discount period. So that means when I go to pay this, I'm going to get a 2% discount on it, right?
yes,
Okay, good. So you take the 2,000 that I still owe this guy. and I multiply it by what?
2%.
0.02. And when I do, that comes out to what, $40? I'm getting a $40 discount.
Yes,
So how much cash am I going to send the guy?
1960.
Good. 2000 minus 1960. I mean, minus 40, excuse me. That $40 discount means I have to pay the guy 1960. So what do you want me to credit for that 1960?
credit cash, if you're gonna pay them.
Good, I'm paying them. Credit cash. We're working on getting rid of that upward inflection in your voice on that. Credit cash. Good. Okay. What do you want me to debit? After I send him this cash, am I going to owe him any more money?
No,
No. So I want to get rid of that $2,000. It's tilted to the credit side, right? So I'm going to debit the account payable. 2,000. So now that's zeroed out. Don't owe him anything anymore. Okay, good. Because he said, hey, pay me 1960. As long as you pay me within 10 days, we're all good, right? Okay. And do I need a debit or a credit to make this journal entry balance? Do I need a debit or a credit to make this journal entry balance?
credit of $40 discount.
Good. I need a credit of $40. And that credit, guys, as we said last time, is going to go to what? Inventory. Inventory, because I paid less. I didn't pay 2,000 for the inventory. I paid what? 1960, didn't I?
Yes,
Okay, so when I credit the inventory for 40, now the balance in the inventory account shows 1960. How much did I pay for it?
1960.
1960. Isn't accounting beautiful? Look at that. Have you ever seen such beauty?
Hmm.
Okay, now, even though I gave that speech about doing this the long way, and you could work your way through it that way to make sure you're covering all the bases, and you should be doing that as you're practicing with this material. Another way to have answered this would be to say, well, look, I've got the 4,000 original purchase. They sent back half. So that means they still owe 2,000. If you get a what? If you get a 2% discount, that means that you're actually only going to pay what? 98% of what is left as being owed. And so the answer there is 1960. If you were taking the CPA exam, I would advise you to work it that way. You're not at a point where you need to be worrying too much about time, because I've given you a luxury of time. As you move further on in accounting, they're going to start to press you to do these things quickly. I never know why that is, by the way. I'm not interested in how fast you can do something. I'm interested in how accurately you can do something. What's the question? What's that commercial? It's not how fast you mow, it's how well you mow fast. Okay. And all I care about right now is how well you mow. I want to see that you get these things through correctly. My friend's son sometimes makes mistakes on his math because he adds something when he's supposed to subtract it. And I tell him, you know, in life, it's not about doing it fast. It's about doing it correctly. You know, in life, you would check your numbers 2 and 3 times before you finally go ahead and, you know, commit that you've got the right numbers there. So anyway, but I give you plenty of time to work through this, but this is a faster way to do this right here. Question. Okay, good. Which of the following is shown on the multiple step, but not on the single step? And I sort of, tilted you towards this answer when I was looking at the slide there, when I pointed out gross profit is probably the most important number, to be honest with you. Maybe operating income is a close second. But gross profit is a very important number, let's put it that way, on the income statement, because we want to see what we have left over. We didn't see that on the single step, okay? But on the single step, we did see the net sales. That was part of the pluses that were up there. We saw what? Net income. That number's the same on both. We saw cost of goods sold. We just didn't see it as a subtract from net sales. We saw it in the what? Minus section of that single step. So single step will not show you gross profit. And that's probably the biggest issue with the single step. Question. Okay, good. Number 7. During 2013, Parker Enterprises generated revenue of 60, expenses of 30, operating expenses of 12, and a loss on the sale of equipment of 2. What is the operating income or income from operations, synonymous terms? Okay, so who wants to help me out with this one? When I ask for help, just so you're clear, I don't need any help. I expect help that I don't need. Sometimes I think students say, who wants to help me? I think students think, oh boy, he doesn't know. Let's watch him struggle. Okay, so that's not why I'm asking for help. So
you would get the revenue minus.
Okay, wait a minute. Revenue is 60. Good. Okay, then what do you want to do?
Minus the cost of goods sold of 30,000.
Cost of goods sold is 30. Good. What do you want to call that next line? If I put a line right here, what do you want to call that? It's probably the most important number on the income statement.
Gross
Gross
profit.
profit.
Good.
And then you want to minus your operating expenses, 12,000.
Then I want to take out the operating expenses. $12,000. Okay.
That should give you your net income, right?
No.
No.
What do I call that number?
Operating income.
Good. Or income from operations, if you want to be long-winded. Operating, and I don't mean you, I mean the question. A little long-winded, and that they said that becomes 18,000.
Yes.
That's the answer to the question.
Yes.
Okay, good. Now, what if it asked you for net income? What would you do? It didn't ask you for net income, but what would you do if they did? Well, look, you dealt with this number. You dealt with this number. You dealt with this number.
So you would have to subtract the sales of equipment.
Okay, I would subtract the loss on sale of equipment.
2,000.
This is non-operating, right?
Yeah.
Okay, non-operating of 2,000. That gives me then my net income number of 16, right? Which is the question didn't ask that, but I asked it. Okay, good. Question? Okay, good. I'm giving us some information here. I kind of wrote all over that, but let's go ahead and highlight everything so we know what we want to look at in this question. And they're asking me, what's the net sales? Who wants to set that one up? Come on, guys, this is easy. Net sales, how do I set that up?
Sales minus return and allowance minus sales discount.
Sales is 10,800, good. Less what?
Returns
Less returns is what? 400?
yeah,
Less. What else do you want to subtract here?
discount
Discounts of what? Can you still hear me?
yeah, discounts 200.
Discounts of 200. Okay, good. So that gives me what? Net sales of 10,200.
Yeah.
Good. Okay, good. Next question says, what is the gross profit? So now what do you want to do?
Net sale minus cost of goods sold.
Net sales minus cost of goods sold is 5,000. Is the cost of goods sold. That gives me gross profit here of 5,200. Right? Right.
Where do you
Okay.
get 5,000?
Huh?
Where do you get the 5,000?
Cost of goods sold. Cost of goods sold is 5,000.
Oh, okay, I see it now.
Yeah.
Thank
We're
you.
using the same facts from the previous question.
Okay.
Okay, good. What's the gross profit / margin ratio? Gross profit, gross margin, guys, are synonymous terms. So what's the ratio? Do you remember how to calculate that, the gross profit ratio?
I think 5,200 divided by the net sale.
Good. Gross profit divided by net sales gives me the gross profit margin ratio. Margin and profit are synonymous terms. And so I would need to say it again. What numbers am I putting into this fraction?
5,200 divided by 10,200.
Gives me what? So just eyeball
0.509. So 51%.
51%.
Round it up.
Good. When you do a number in your calculator and somebody's asking you the number, don't put the 0 in there. So if you take 5,200 and you divide that by 10,200, and I know that the machine always puts a 0 in front of there, which is meaningless. Just tell the person 0.509 or 0.51. And when you put the 0 in there, it makes it sound like maybe the 0 is important, which it isn't. Okay. Okay, good. I'm not trying to make you feel bad about yourself or anything. I'm giving you coaching advice that I think is going to help you. Okay.
Yeah.
Okay, good. Okay, so that's 51%.
Yes.
Okay, good. Okay, good. Sales revenue less cost of goods sold. On my test, guys, sometimes the previous question gives you the answer to the next one, right? Or if you get stuck with a question, skip it and keep going. I might actually give you help to the question that I just asked you in the next one. Okay, but we see that what? Net sales minus cost of goods sold gives us what? Gives us gross profit.
Yes.
Now, this question, I didn't say net sales, and so you might have gotten a little say, well, you didn't say minus discounts or anything. Well, look, the only other choice that is even close to the right answer would be A, right? Even though I didn't tell you net sales, right? Okay, let's look at this one. Number 12. By the way, let me stop for a second. Do you think it's important for you to know how to calculate net sales for your exam?
Yes.
Do you think it's important for you to know how to calculate gross profit for your exam?
Yes.
Do you think it's important for you to know how to calculate operating income for your exam?
Yes.
Do you think it's important to know that operating income minus non-operating items like sales of equipment and interest revenue and expense are going to equal net income?
Yes.
Okay, just want to make sure. Okay, good. Let's come over and let's take a look at this one. And they say, what is the net cost of goods that they pay if they pay within the discount period? Okay, so let's take a look at this one. And they give me the terms here, 210 net 30. What does that mean?
2% within 10 days, or else you pay the full amount in 30 days.
Good. Okay. So what journal entry should I make when I first buy this stuff, when I'm buying it on credit? When I first buy this stuff.
So debit inventory, credit, accounts payable.
Beautiful. Debit inventory for 7,000, credit account payable for 7. Nice. Okay. Now I'm going to go ahead and remember, guys, we're taking the long approach to answering these questions. I'm going to debit my inventory for 7. That gives me a balance of 7, obviously. And I'm going to credit, and I guess I'm going to use some of this space down here, my accounts payable for 7,000. And that will give that a balance of 7,000. Okay, great. Now, they tell me that they pay within the discount period. So how much am I going to have to pay to liquidate this payable? The guy's going to give me a 2% discount, and he's going to be happy with that payment on the $7,000 bill. So how much am I have to pay him?
7,040. 6,860.
Good. 7,000 times 0.02 is what, $140?
Yes.
That's the discount. Okay. 7,000 minus the 140 leaves me the 6,860 that I have to pay this guy.
Yes.
So what would be the journal entry when I go to pay him? Do I have to credit anything here?
Credit cash for 6,860.
Good. I got to pay him cash, 6,860. Since I have to pay him the cash, I'm going to credit the cash. Good. What do you want me to debit? When you pay a bill, do you owe anyone money anymore?
Accounts payable.
Good. I'm going to debit account payable for 7,000 because he said if you pay me 6,860 within the required amount of time, 10 days, I'll accept that as full payment. So I have to debit the account payable for 7. Do I need a debit or a credit to make this journal entry balance?
You need a credit.
I need a credit. Good. I need a credit of 140
Yes,
to make it balance. What's that credit going to be to? How much should I pay for the inventory? How much cash should I pay for this inventory?
total of 7,000.
How much cash
Oh,
did
I
I
mean,
pay for this inventory? Huh?
1,860.
Good. So how much did the inventory cost me?
6,860.
Okay, but how much is the inventory account showing right now?
7,000.
So how do you take an asset that is showing 7,000 and
We
decrease
have
it?
to credit that 140 on inventory.
I credit 140. Now the balance shows 6,860. So if I credit the inventory, just to fill out this general journal, that's inventory. Inventory
So now you'll balance, right?
of 140. The inventory account shows what I actually paid for it, right?
Yes,
So is it true that as a result of this transaction, the net cost of those goods is 6,860? If I go and I sell that inventory tomorrow for $8,000, what journal entry should I make? Say I sell it for $8,000 cash. I go and I sell whatever I bought here for $8,000.
so you would debit cash for 8,000?
Debit cash for 8,000. And again, guys, I'm just now playing jazz with this. I debit cash for 8,000. I credit what? What do you credit when you sell something?
Cost of goods sold,
What do you credit when you sell something?
inventory,
What do you credit when you sell something?
Revenue?
Good. I'm going to credit my sales for 8,000. Good. If you sell something, do you have it in inventory anymore?
no,
No.
Okay, so I'm showing inventory of 6,860. I don't have it anymore. I want it to be to 0. How do I turn that to a 0? How do I turn an asset account that's showing 6,860? How do I make it 0?
Credit.
Good. I have to credit the inventory 6,860. Now it's showing 0. So I credit inventory. Where am I writing this journal entry? Which Elizabeth, you said, but I just wanted to go in order here. I credit inventory 6,860. Good. What do you want me to debit? How much did that inventory cost me?
well, if you sold it for
7,000.
8,000,
How much did the inventory cost me?
it cost you 7,
No, it didn't.
6,860.
Good. It cost me 6,860. So is that the cost of the goods that I sold in this question?
Yes,
6,860. So is it true that the net cost of the items in the inventory, going way back up here, was 6,860?
correct.
Okay. What's the gross profit on this deal?
Sorry, but I have a question for the discount. So what we
Hang
gonna
on
do
a
with the
minute.
discount?
Hang on a minute. Don't hijack the flow. Of, we'll come back to your question.
So your
What's
gross,
the-
would your
what's-
gross profit be 1,140?
Okay, how'd you calculate that?
Well, if you sold it for 8,000 and you bought it for 6,860, you subtract those two, you get 1,140.
Okay, good. So that's my gross profit.
Yes,
Say it again, 1,000 what, 640,
1,140.
140.
Yeah.
Good, excellent. Okay, Shirley, go ahead with your question.
Yeah, so the sales discount,
Yeah,
that is not our inventory, right? That is should be, I think I'm little confused what we're about to do that, because if we put it in the inventory, then it would be our cost of goods sold, right? What
how
we're
much
gonna
did
do
I
with the
pay for the
140?
inventory? How much did I pay for the inventory?
6890, I think. 6860.
I paid 6,860, so the inventory account has to show the amount I paid for it, right?
Yeah.
Okay, well, before I made this journal entry right here, in which I applied the discount to the, where's that journal entry now? Before I made this journal entry, where the hell did that journal entry go? Before I made the journal entry that I can't find right now, where the hell did it go? I know I made the journal entry. Right. I think it's what's confusing me is I think I erased the debit to account payable somehow. I debited the account payable for 7,000. So before I made this journal entry right here, where I debited the account payable for 7, credited the cash for 680, and credited the inventory for 140. Before I did that, the inventory account was showing 7,000, wasn't it? It was showing 7,000. That's that credit right there. That credit right there is that 140 credit. That's that number right there that I then posted over here. Inventory was showing 7,000, but I didn't pay 7,000 for it. I paid how much?
6860.
So to bring it down to the proper amount, which is what I paid it for it, I had to credit inventory, right?
Yes.
Okay, what's your question?
That is not the inventory 140, that is not our cost of goods sold. That is something we can say that a profit. But 140 is supposed to be our profit.
I have no idea what you just said. What are you talking about? That makes, I have no idea what you just said. You just threw out a bunch of words that it mean nothing to me.
Okay, so we got a discount of 140, right?
Correct. Yeah.
Yes. So if we put in a cost of goods sold, the whole amount is 7,000, but
No,
the
it's not.
actually,
No, it's not. It's 6,860.
okay, okay, thank you.
The cost of goods sold is 6,860 because that's the cash that I just paid.
Yes. Okay, understood. Thank you.
Now, what you might be doing is confusing the subtract of the discount that we give. This is a discount we took. The
Mhm.
discount we give as the seller, that's subtracted off of our sales to get the net sales, right? So you got to understand, are we giving the discount or are we getting the discount? If we're getting the discount, then we're subtracting that from the inventory. If we're giving the discount as the seller, we're subtracting that from the sales to get the net sales, right?
Okay, got it. Thank you.
Mhm. Okay. Let's see. What do I want to do? Because I feel like I'm kind of killing you right now. So here's what we're going to do. I'm going to stop. And I'm going to tell you that I want you to finish this exam on your own. We will go through it when we reconvene next time, because I feel like you're starting to get a feel for this, but I feel like I've got, some of you that are maybe kind of tuning out or giving up or saying that you're not understanding or something like that. So what you want to do is work through the rest of this exam. You should be able to do practice exam. You should be able to do this on your own. We will reconvene next time. We will go through the balance of these questions and we will jump into, and we're jumping to chapter 7 now. 6 and 7 are related. When you look at what's on Canvas now, you can see that I have more of the chapter 7 stuff than I want to be up here. So I'm gonna have to get rid of some of this because this is too much. But the main thing is the chapter 7 slide, chapter 7 inventory class example, the solutions to that, and the chapter 7 practice midterm that will be with, there'll be one with no answers and one with the answers. I'm gonna get rid of some of this stuff because I don't want this here. Okay. Question? Okay, guys, keep up the good work. Starting to build up that muscle tissue, guys. I need you to get stronger at this stuff. I'm going to keep pushing you till we get there, okay? All right, guys, I will see you on Thursday. Be ready with that exam. I'm going to push you hard to give me the answers on that on Thursday, and then we'll start to jump into chapter 7.
Thank you, Professor.
Thank you,
Okay.
Professor.
Have a good day. Okay, see you
Yeah.
later. All right,
Yeah,
good work, guys.
yes. Professor, I have a question about
Let me
the,
stop the recording.
yeah.